Hey everybody, Jason here. In today's video, we are going to talk about what is deductible. What kind of expenses can we deduct for tax purposes? So there's some categories here, some things you can do, some things you can't do. I will tell you one thing that will make this a lot easier for both you and your tax accountant is if you track your expenses along the way, whether that be in, an Excel or a program like TurboTenant, things along those lines where you can track those expenses and then classify them as well in some of these categories. So having said that, let's talk about some of the things that we can do or that should be deductible. Oh, the other thing is I wanted to make sure that I at least put this out there is that I am not a tax accountant, a tax attorney. The only qualifications I have to speak about this is what I've personally seen in the past. So take this for what it is, and if it generates questions, make sure to ask the professionals in your life that you go to devise this stuff. They're going to know far more about the details of this than I am. This is just kind of an overview on some of the things we can look for on deductions and expenses for our rental property. So first thing I want to talk about, of course, are property taxes. You can deduct property taxes. You can deduct things like your mortgage interest, your insurance premiums, those kind of financing components of the home. Now, you cannot deduct the down payment. You cannot deduct the principal amount of the mortgage payment. That ends up becoming it's a depreciable expense, and that is calculated in a different way, and that's depreciation. So on depreciation, I think houses are 27 and a half years. It takes that equity, that value there, and then it divides up over 27 and a half years, if that's the right number. Now, I think there's accelerated depreciation, and I don't know if this varies. I think this is federal. I don't think this varies state to state, but if I'm off a little bit, and there's a tax person out there, please correct me. I'm perfectly fine with that. I'm throwing out here what I recall. But yeah, that portion isn't necessarily the payment itself isn't a principal, isn't deductible. It's the depreciation that'll be deducted for that component of it. So that's what depreciates the value of the home. Of course, the next thing we're talking about that can be depreciated or expensed, is deductible, are your operating expenses. Now, this is going to be all your day-to-day activity stuff. This is going to be stuff like your property management fees. It's going to be stuff like maintenance and utilities, anything along those lines. Materials that are, well, which we call under maintenance, but go into the day-to-day operation of the home, turnover expenses, cleaning expenses, things like that. Let's see here. Professional services. So your accountants, your attorneys, things along those lines that provide a professional service for you. Those are also deductible as part of what you can include for deductions on your rental property. Travel expenses. You can deduct travel expenses if they are incurred for something that's happening with your rental property. Now, you can deduct mileage for trips if it's like you're driving to the rental property to lease it, to maybe go over there and check out something for an existing tenant, things along those lines. You can capture that as well as part of travel expenses. One thing I would not do is meals. I'm trying to remember. I think that meals in certain situations are deductible, but it's like 50% of the meal or something along those lines. On that one, I will definitely defer to the tax professionals. Well, actually, on all this stuff, I will, but it is something like that. So I guess my point being is on the front end, I wouldn't go out and try to put every dinner that you've ever eaten out for you and your family as an expense, a deductible expense on the rental property, because I just don't think that's going to fly. Another thing you can deduct is home office expense. So if you use a part of your home exclusively for managing your rentals, let's say you have 20, 30, 40, 50 rentals, and that's what you do full time, and you have a part of your house, then you can deduct a certain percentage of those expenses, of the overall living expenses, and put that on as like a almost like rent business expense. So you can deduct that as part of your rental expenses. Advertising costs obviously is again another form of operating expense, getting your property leased and marketed up. Any money that you put into that. Any loan fees, I missed that one on when we're talking mortgages, but the loan origination fees, anything that costs you money to actually get the financing for your home, that is deductible as well. And it's probably, I would think that that's probably included in the depreciation schedule, though. If I'm thinking about it, I think it's over the life of the loan itself, if I remember correctly, and it would be because they'd be an upfront fee. It wouldn't be an everyday operating expense. Let's see here. Pest control is another one that would fall into the operating. Again, you're treating the home. It's part of the operating expenses for the property. So that's some of the categories. Again, I'm not a tax accountant. Maybe there's something I missed. If you know of anything that you know could be deductible, hey, throw in the comments below. I'd love to hear it. The purpose of these videos is to help landlords. And if that means I missed something you can add to that conversation, then by all means, please do that. Other than that, I hope this is helpful. If you have any questions, again, drop comments below or reach out to me via email or website. It's jason@thelandlordlaunch.com. And thank you. Appreciate you watching the video today, and we will see you next time.